Welcome back, everybody. Today we have a stock put in front of us by one of our viewers, and we found it rather interesting. So we took a look further into it and have their earnings report that was dropped today, May 6th of 2024. So if you're watching this video in the future, these earnings are as of today. So before we get into that, I want to actually show you our portfolio. Now, the dividend-based portfolio is an investment portfolio based on $400 a month of investment. Now, in that portfolio, we are making $127.66 every month in dividend checks without doing really anything for that, which is great. So if you look at our positions, you'll notice that we have 19 stocks in our portfolio, and every single stock is making us money with the exception of Pfizer. Now, we did just buy Pfizer, so maybe we have to give them a little bit more time. But would we add Palantir stocks to this portfolio? And for that, let's find out. Let's get into the numbers. So Palantir Technologies is a business company that makes software. They're data analytics, AI, that kind of thing. They do a lot of work in the government space. Now, the first thing that you'll notice if you're looking at this company is they are trading pretty close to their 52-week high. You'll see here that their low was $7.59 and their high was $27.50. Now, currently, they're trading pretty darn close to that, $23.22. Why are people so optimistic? Let's dig in and find out. Digging into their earnings report shows us some interesting numbers. So we have a net income of $106 million. Their earnings per share is still below that one number that we like to see. And basically, most of their highlights show a year-over-year increase in positive numbers, which is great to see. Now, most of the time, when I look at these earnings reports, I like to skip way ahead. So we're going to skip through all this stuff. Most of this is just forward-looking statements and returns, and we'll leave a link to this earnings statement so you can see for yourself as we go through it. But we're going to skip all this stuff and get right into their revenue. So this is the Palantir Technologies Condensed and Consolidated Statement of Operations. Man, say that 5 times fast. But from when they're doing their report, and if you're looking at this in your brokerage account, this would represent a income statement from Q1 of 2023. So if we're going to compare their earnings report to what you see on your account or your brokerage account, now in Charles Schwab, it reads from right to left, and that's in 5 quarters. And you'll see that this says $525 million. Here in this case, you'll see the 525 number showing up in Q1 2023. That is not Q4 2023. So back to their earnings, you can see that they have increased to $634 million, up from 525. And as you go through the cost of revenue, gross profit, operating expenses, the interest income, you can see that most of this stuff is a positive number, especially their net income. When you go from $19 million to $106 million, I'm pretty sure you got a lot of executives there that are feeling a lot better about their jobs. So most of this stuff looks pretty good. Scrolling on to the cost of the revenue towards the bottom of the page here, you'll notice that that has increased by a significant margin. Some of that has to do with some of their investment space. We'll cover that in some of the articles they've got. But as far as the numbers go, this has been a pretty good year for them, assuming their year started in March and ended the following March. So assets are something on the next page that we look at in our personal portfolio. These show up in our spreadsheet. And what we like to see with their asset reports is we like to see the assets going up and the liabilities either staying the same or going down. And as you can see from their last quarter, their cash and cash equivalents has gone down. That's not necessarily a great thing, but their total assets have gone from $4.5 billion to $4.8 billion, and their total liabilities. So I'm going to go through skip through all this stuff here and get right to their total liabilities. Their total liabilities went from this time last year from $961 million to $945 million. Now, that's actually a good thing when you have their assets going up, their liabilities going down. But there is a problem. We have a big issue with their cash flow, and I want to cover that before I go through the rest of the report. If you look here from 2022 Q4 all the way to December 31st of 2023, you're going to notice something with their cash flow. They were positive $260 million, and then as of the most recent quarter, they lost $1.7 billion in cash for the last quarter. That's not good. If you look at their most recent financial report, you'll see that they started this quarter with $850 million. Then as of this financial report here, you'll notice that they ended that with $539 million. Now, that is also a decrease, which a lot of people go, whoa, that's not good. However, their operating income has increased, and so that might not necessarily be the worst thing for these guys. Before we move on to some of the things that might not make that seem like the end of the world, We've got the income from operations have increased a lot. So these are a lot of positive signs for this company that might be potentially turning a corner in a good way. So one of the things that will help this company in a big way is their Department of Defense contract that they are designated as an awardable contract for using their software as part of the marketplace in the DoD contracts. Now, this is a big deal for these guys. So they can use Palantir's technology for AI in military operations. Let's say you need to fly a plane. Let's say you need to maybe do logistics a little bit early, a little bit easier, a little bit more efficiently than you were doing it before. Their software can help make that happen. So the other thing that we think that Palantir could benefit from is their partnership with Oracle. Now, Oracle is a huge conglomerate ERP developer, and they're also another software company. All they're really doing is they're like leveraging their, hey, here's our algorithms, put it in your software. And if Oracle uses it, great. But if they don't, it's not going to like make anything for them. I think unless they've got they better have good attorneys, because Oracle's a software company too. And Oracle has their own AI that they use. The fact that they're partnering, which is great, probably just means that they're feeling threatened by Google and Microsoft, and that's what they're doing to try to maintain it. Now, Oracle's got a huge presence in they're huge. I mean, Oracle's a giant software company. So maybe this partnership will be good for them that way. I think that if you're going to be a business that is bleeding cash and you're not everything else going positively, you're going to want all the partnerships you can get. And in this case, that's what they're doing. It makes sense to me that this is good. That if you're going to partner with a company, why not pick one that's got global presence? Which you could say the same thing about the DoD, which the United States military tends to be everywhere. If I was in their position and I wanted to come up with long-term cash flow, that's how I would do it. So when I look at the article, this is what comes to mind as a possibility. So tell us what you think. Would you add this to your portfolio? And if so, what are the reasons why you would add to your portfolio? And what are the reasons why you might avoid this company? And if you want to know what we did purchase, stay tuned, like and subscribe, and we will make a monthly purchase, and this stock might be on that list. Thanks for watching, and hope to see you next time.